Assalamualaikum warahmatullahi wabarakatuh. I'm Muhammad Syamdi Mizali, and today we will be talking about Malaysians' latest export data for November and why the slower growth and the exports deep into the US, and why is this attracting attention. So basically, Malaysian exports has rose 7% year on year in November, and it is significantly below the 11.6% forecast from Bloomberg surveys. And on the import sides, the country have a 15.8% increase, which squeezed the trade surplus down to 6.1 billion ringgit. And there is something that needs to be concerned, which is the exports to the US, which is our Malaysia's second largest trading partner. That it is fell by 0.9%, making it the second consecutive month of decline. And the US had imposed a 19% tariff on Malaysian goods in August, and which is now cooling demand. We have all seen the negative side of it, but the positive side of it is that the export volumes for electrical and electronic products jumped to 15% as companies raced to finish orders before potential semiconductor tariffs. Meanwhile, shipments to China increased and exports to Taiwan hit a record high. So, what the experts say about this? So, Bank Muamalat's chief economist, Muhammad Afzal Nizam Abdul Rashid, described that this performance as still decent and noted that US tariff are weighing on imports now. The full impact could become clearer in 2026. In summary, Malaysia's trade remains solid overall, but the export growth is slow, and especially the reduced shipment to US. But it is balanced off with the fast-growing export of electronics to the China. But the tariff are reshaping dynamics of how our Malaysian trade is.
Alright, next I will continue to discuss how the news is related to international finance costs. So since the news mentioned about the Malaysian foreign transaction, specifically export and import, it is related to chapter 2, which is international flow of fund. In this chapter, we have been introduced to the concept of balance of payment. So what is balance of payment? Balance of payment basically is a summary of transaction between domestic and foreign resident of a country over a specified period of time. In the case of the news, the transaction is the sale and purchase of goods by the Malaysian citizen with the US. In the news, it is also mentioned that due to the tariff imposed on Malaysian goods by the US government, the rate of Malaysian export growth is now slower than before, since now trade between US consumer is declining. So how can tariff affect trade between Malaysia and US consumer? First of all, tariff will increase the price of Malaysian goods and make it more expensive, since it will add the percentage of tariff to the normal price. So this will increase the normal price to become higher, and since the percentage of tariff imposed on Malaysian goods is at the rate of 19%, it can be considered as a significant increase in the price. So this can be the reason why the trade between Malaysia and US consumer is declining, because now US importer will seek for other option that will give them quite similar product with a cheaper price. So the issue regarding tariff is also discussed in chapter 2 of international finance costs, in which tariff is considered to be one of the factors that affect international trade flow. So tariff are imposed by a government of a country to help their domestic seller to remain competitive in order to compete with the foreign seller. By imposing tariff, it will increase the price of foreign goods, and this give opportunity to the domestic seller to sell their product more, since now the local citizen is less interested with the foreign good due to the increase in price.
Now I'm going to explain the implications of Malaysia's slowing export growth based on Chapter 2 International Flow of Funds. First, government policies. According to the article, Malaysia's exports to the United States declined mainly due to high tariffs on Malaysian goods. This was reflected under the topic Factors Affecting International Trade Flows. Tariff will increase the price of imported goods, which will reduce demand in the importing country. As a result, Malaysia's exports will fall due to the policy decisions made abroad. This shows that international trade is not only influenced and driven by market force, but it is also sensitive to government intervention. Second, the article highlights the importance of export diversification. Although the exports to the United States decreased, Malaysia experienced stronger demand from China and Taiwan, which helped mitigate the overall impact. We can see that dependence on a small number of trading partners increases vulnerability to external shocks, which was explained under the topic Trade Volume Among Countries. By diversifying export markets, Malaysia reduces exposures to policy changes and economic downturns in one single country, in this case, the United States. This implies that diversification is not just a growth strategy, but it is also a risk management tool for the country's current account. And thirdly, the decrease in demand of export goods might lead to exchange rate adjustments, although these adjustments will not immediately solve trade imbalances. With weaker export performance, there should be downward pressure on ringgit, which in theory should result in Malaysian exports becoming cheaper and more attractive to foreign buyers. However, as explained in exchange rate and J-curve effect, volume trade does not respond immediately to the currency movement because there are a lot of other factors that will delay the impact. Therefore, even if the currency weakens, Malaysia's trade balance will continue to decline in the short term.
So now we moving on to recommendation part. We going to have 3 recommendations. The first one, diversify export market to reduce external vulnerability. So Malaysia should diversify its export market in order to reduce external vulnerability arising from excessive dependence on the United States. From an international finance perspective, heavy reliance on a single trading partner increases exposure to external shocks, such as changes in US monetary policy or economic slowdown. So, by expanding export to Asia, China, the Middle East, and the European Union, Malaysia can stabilize its foreign exchange earnings, strengthen its current account position, and reduce volatility in its balance of payment. So, this diversification improves Malaysia's resilience within the global financial system. Our second recommendation is upgrade export structure to support foreign capital inflow. For Malaysia, they should shift toward higher value added and technology intensive exports to enhance its attractiveness to foreign capital flow. So in international finance, countries with advanced export structures are more likely to attract foreign direct investment. And as investors seek stable return and long-term growth potential, higher value export generates stronger and more consistent foreign currency inflow, which helps support the exchange rate and reduce dependence on short-term portfolio capital. And so, in short, this strategy strengthens Malaysia's external financial position and reduce exposure to global financial volatility. Okay, so for our third and last recommendation, we need to have a stronger coordination between trade and financial policy because it is very essential. Measures such as export financing, trade facilitation, and strengthening regional trade agreements can support stable performance. Stable trade flows help maintain investor confidence and reduce risk arising from cross-border financial movement. So now we reached the end of our video. So to conclude our video presentation, Malaysia export slowdown highlight the close link between global trade conditions, capital flow, and exchange rate in international finance. Economic development in major economies like the United States can significantly affect Malaysia's balance of payment and financial stability. By diversifying exports market, upgrading export structure, and strengthening policy coordination, Malaysia can better manage external shock and remain resilient in the global financial system. Thank you for watching. Assalamualaikum warahmatullahi wabarakatuh.